Welcome to Blockchain Unpacked. Blockchain Unpacked is a videocast and podcast series held in partnership between RegTech Associates and Crystal Blockchain. Join Jason Baud and Marina Kaustova every month and explore the real-world impact of criminal activity beyond the blockchain. During the series, we will introduce you to a range of experts who will help analyze regulatory effectiveness and share the latest news, trends and predictions in a digestible format to keep you in the know.
Hi, I'm Marina Kaustova, CEO of Crystal Blockchain, and welcome to Blockchain Unpacked. This show features expert insights from prominent leaders in blockchain, regulatory, and technology industries. And I'm delighted to be co-hosting this new episode with Jason Baud, CEO of RegTech Associates. Jason and I will kick off by covering some of the developments in the Web3 space that caught our eye in the past few weeks. And then we'll be joined by this week's special guest, Sabih Behzad, Managing Director, Head of Digital Assets and Currencies Transformation at Deutsche Bank. So let's dive right in. Jason, how are you? And what's been happening in your life and RegTech Associates since our last catch-up?
Hi, Marina. As always, it's good to see you again. Our last show seems only a few weeks ago, and I'm really looking forward to today's show and today's guest. I think we've got loads to talk about. Obviously, since our last show, in which we focused on the travel rule, the deadline for implementation of the travel rule in the UK came and went, and there was a lot of fanfare. So now it's really down to see, how the implementation activities in the industry and the VASPs, progress. I'm really interested to see how that goes. If you're listening to this show and you didn't listen to the last show, please check out episode 5 with Harm Arts of 21 Analytics. It was a really good show. The second thing I've been working on recently is looking at events, and it really seems, we've bounced out of COVID this year in 2023 with a real bang, and September, October, November, I think are going to be bumper months, for the events industry. We've been planning, the team have been planning our attendance at various industry gatherings. But I've got to admit, Marina, I've got a bit of FOMO over missing Token 2049 next week in Singapore. I'm pretty sure your team are there. I'm not sure if you're going, but yeah, I'm looking forward to hearing all about it from your team and from Crystal.
Yeah, of course. I think that's definitely the largest and the most prominent crypto event of the second half of the year, and everyone's very excited. Our team, of course, is going to be in Singapore next week, and me myself as well. So yeah, I'll definitely bring some more insights, from the ground for the next episode. I know for sure.
Someone told me 10,000 people. Does that sound right? I mean, that's going to be huge.
Yeah. That's super exciting, and I know that many players in crypto and blockchain space are preparing some special announcements for this week. Some started leaking out already. So yeah, looking forward, and certainly we'll bring more news from there.
I'm going to turn off my social media. I don't want to see anything because my FOMO is going to go through the roof next week. So yeah, you tell me all about it at the next show. So the other things that I've been looking at is a couple of sort of news articles. And the first one that caught my eye was the Indian finance minister, Nirmala Sitharaman, gave a speech at the Global FinTech Festival in Mumbai, and she was talking about global collaboration in a responsible financial ecosystem. It was a wide-ranging sort of 30-minute speech, but there were some things that caught my eye. The first was she was talking about the threats of globalization and things like physical border threats, cyber attacks, etc. She also mentioned crypto, although crypto as a threat and an opportunity. That's the first point. The second point was I was quite surprised by, she talked about the powerful role of technology and how fintech in India sort of represents that. And fintech in India represents 93% of the payments flow within the country, 7% only coming from the incumbent financial players, which I thought was an interesting stat. Now, I'm not a payments geek, so I don't know if that's how that compares to other regions, but I was pretty impressed by that. The other thing on that topic of payments she talked about was how global collaboration was driving the economy to grow, and she called out a cross-border payments collaboration between India and Singapore, and also recognized the payments industry. And we talked about payments and stable coins on the last show are slow to move on the crypto scene. And then separately, someone was commenting about this speech, and they talked about the National Payments Corporation of India actually advertising their first blockchain role. So it seems like, they're really going to go headlong into, embracing the crypto and blockchain revolution. Of course, the backdrop to this story is that India have the G20 presidency this year through to November. And they've she talked about the possibility of establishing global regulations and discussing policies on how to achieve that. She also talked about some papers from the IMF and the OECD and the Financial Stability Board. I think this speech was on Monday or Tuesday. And then yesterday, the FSB, the Financial Stability Board, issued their paper, Global Standards, a synthesis paper, Policies for Crypto Assets. And although I've not had a chance to read it, it's pretty long. There's some interesting summaries and headlines. Probably the most popularist headline and summary is around that the global standard setters are calling for a global regulation and not a ban. And although I've seen a lot of rhetoric in different platforms about, is this the central authorities trying to kill things like innovation and DeFi? I think, I'm personally a bit divided. I think global regulation, as we've spoken about, is a move in the right direction. So I'm going to pause for comment, but also not give my full view till I've had a chance to read the paper properly. What did you pick up that story, Marina? What did you think?
Yeah, well, I'm with my entrepreneurial background. I'm always interested to see, how what entrepreneurs think as of the best, place to launch the business, to start new businesses, and from Crystal perspective, we're also interested to see how new territories are developing in terms of growing new businesses, especially in crypto and blockchain space. And it's interesting that how these reports is balanced by the sentiment on the market about the fact that it is very likely that in the next 10 years, India must be the best location to build the tech startups, because there you have a capital availability, you have a tech talent, you have a lot of support now from government and regulators. And the target audience is very much ready to consume it, and the economy is predicted also to be stable. So I'm interested to see actually, what part of these new tech businesses are going to be more centered around, blockchain and fintech, trying to, again, adopt more of a blockchain and crypto.
Yeah, I think that's a really good point. I mean, India has been a powerhouse of technology for, a couple of decades now, right? But, perhaps powering Indian entrepreneurs, more in the next 10 years in crypto is a really interesting thought. So, yeah, amazing. Looking forward to that. The second thing, very quickly, is later on in the show, we'll be discussing crypto custody. Therefore, the second story that caught my attention was Untitled, who are a registered crypto asset firm in the UK. They're one of about 42 such firms, and they were acquired by ClearJunction. And ClearJunction have been around since about 2016. They were regulated as an EMI, so that's an electronic money institution, and they've been authorized and regulated by the FCA, also in the UK, since about 2018. So, a 5-year-old traditional fintech operating in the fiat world, acquiring slightly newer digital-only, crypto-only asset firm. So the acquisition allows them to gain immediate access and that license into the crypto world, offering them off-ramp, on-ramp. And, they're making the point, I spoke to the CEO, they're making the point about the risk management culture that they already have within ClearJunction. So, again, I'm not sponsored by either of those firms, but that popped up in the news, and I think it fits in with what we've spoken about, Marina, in the past sort of few weeks about crypto growing up and smaller firms needing to collaborate and combine to meet the cost of doing business.
Yeah, we don't see many such news as of recently, and especially after the kind of a tough phase where for a lot of companies it was hard to obtain a license from FCA or to keep, the business operating in UK. It's good to see, the news taking the other direction, and I consider this to be kind of a consolidation phase. where traditionally finance-focused companies are rapidly expanding their presence, and they are keeping regulatory requirements on top of the mind because they would need to keep both licenses for electronic money and the crypto license. And of course, it totally makes sense, and it's really a good sign for the market. So it's a cautious yet a very proactive approach, strong indicator of the improving market, I think.
Yeah, exactly. Let's bring the positive vibes to the show, Marina. So that's our job, right? As well as the regulation, let's keep the positive vibes going. So, Marina, I know always how busy you are. What's been going on with you over the past few weeks and with Crystal blockchain?
Sure. Yeah, we are quite in expansion phase, and right now bolstering our teams on the R&D, and we're building a big update to our engine, which actually would pave the way for integration monitoring for a wider variety of blockchain, regardless of their complexity, which I think is important because I want our customers to have a variety of options when they build their strategy, particularly keeping in mind trading companies and asset managers, not being just limited, to the major blockchains and major digital assets. So yeah, that's something that we are busy at. And meanwhile, something interesting our research team had brought to my attention. Basically, they reviewed and read and analyzed the recent paper from MoneyVAL, which is a monitoring body of the Council of Europe, which evaluates 35 member countries, most of them are from European Union, on how effectively they are implementing measures to combat financial crimes related to virtual assets. And I spoke about the very similar report coming from FATF in the previous episode, and this particular report basically repeats the same message. The vast majority of about 80 countries are not following current requirements or have not even started. And that's an interesting point that I'm bringing to attention, that in the opinion of MoneyVAL, this is happening because most of these countries are having a very hard time keeping track of the companies actually operating without the necessary registration or license. So they really struggle to identify accurately, the risks that these entities are having at this moment, and the data that they have is very unreliable. So the report actually suggests that the action will be taking on, better understanding of the risks that are present right now, and for the authorities to make a better effort to get an insight on how these virtual asset service providers operate, who their customers are, and so on. It's an important point here, which also calls for better collaboration between the members and better share of information. And this is considered still to be a very weak point that blocks the development further.
Yeah, amazing. I mean, I've got a couple of questions. MoneyVAL's annual, right? It's what you said. It's an annual. Is it an annual program they run through?
Yeah. This is correct.
Yeah.
Yes.
I mean, it's a big deal, right? I mean, I've spoken to sort of regulators in the past, and they spend a long time preparing for MoneyVAL, and that report in a way is quite shocking. Those stats, right? 80%, but also shows the complexity of managing. It's obviously not an easy task to manage the FATF sort of implementation guidelines throughout the world in all of the jurisdictions that it covers. So yeah, I'm sort of not surprised, but clearly, still lots of work to be done. On the, congratulations on all the product build you're doing. Are you, I'm going to try and tease out of you, are you announcing anything at Money 2020 next week, or is that strictly off limits? Or, it sounds like you're building loads in the platform, so maybe it's going to take a bit longer, but are you announcing anything next week?
Yeah, well, we are going to be making several more announcements these upcoming months, particularly on the front of the capacities of our system for the early identification of certain activities that might be important for compliance teams and risk assessment teams to spot on, and act accordingly. So I'd say that our most important efforts right now, again, is to provide everything that our customers need while they prepare for a better market, for the improvement of the market. Our goal is not to limit them, because everyone wants to be compliant as as much as possible, of course, and we want to cover, of course, as many assets as possible, and to be able to report to them and identify certain activities that worry them and may, be critical for their business also as soon as possible. So this is like where all our efforts are centered around, and definitely will bring much more announcements in the upcoming months, but maybe for the next episode.
Yeah, also maybe Blockchain Unpacked can get a scoop, right, on what you're going to be announcing. So I look forward to that. What else have you been watching and looking at since we last recorded the show?
Well, I think everyone's eyes were on this monumental update in the financial sector involving Grayscale and their legal victory over the Securities Commission. So this battle actually has a decade-long history, tracing back to the efforts of brothers Winklevoss, who actually applied first for the Bitcoin exchange traded fund in 2013. 10 years passed, and we have Grayscale, who are operating the largest Bitcoin fund globally. And there are players who would gladly snatch up this position, but they are having this win for now. And everyone kind of anticipates the positive outcome. And I personally really would love to see that, Securities Commission is not picking up just one winner, but instead actually, opens this free market for all legit applications, but I'm a little bit looking into the future. And if we come back to the present, Grayscale actually hasn't got yet the immediate approval, the immediate node to transform the Bitcoin Trust in spot ETF. So Securities Commission is right now encouraged to revisit their previous claims, and the ball is in their court at this moment. And all eyes again on how they will choose to play this next round. And let's stay tuned for more updates on that, because that is something everyone expects to turn the market around.
And there's no shortage of other firms applying for Bitcoin ETFs, right? So I guess this is a legal precedent, or is turning into a legal precedent. So super interesting story.
I think this is a perfect time to bring in this week's guest. Sabih Behzad serves as the head of Digital Assets and Currencies Transformation for Corporate and Investment Banking at Deutsche Bank. In this role, he oversees strategy and execution and seeks to develop and accelerate use cases within the bank. Key areas of focus include tokenization of assets and money, DeFi, and Metaverse. He represents the bank in various industry bodies and forums, and he's a member of the board of Taurus AG, a leading Swiss-based digital asset company. Welcome, Sabih. It's great to have you with us. And first and foremost, how are you doing, and what has been going in your world in the last couple of weeks?
Hi there, Marina. Thank you so much, firstly, for having me on the podcast today. Really excited to be able to take part. It's been a very busy few weeks. I think you guys were talking about how rapidly things move in the world of digital assets. Well, it's certainly been the case for us as well. I've got a fairly broad-ranging role, so there's a lot of things that I try to stay abreast of. Firstly, I spend quite a lot of time just making sure I'm aware of the news, understanding what some of the competitors, peers, fintechs are working on. So just staying abreast of those projects is one set of activities. A big part of my role is also thinking about how we are facing out to regulators, thinking about how they are developing rules and regulations that will concern us in the space. And we're involved in a number of different dialogues, either with regulators directly or through industry bodies. So I've been very involved in that. I've had the opportunity to speak at a conference over the last couple of days as well. And I was in Geneva attending a board meeting for one of those companies that we have an investment in on the digital asset side. So it's been an absolutely packed couple of weeks, and yet again, more exciting work happening in the digital asset space.
Yeah, awesome kicks in, and happy to see that a lot of things are happening on your side. So Sabih, would often like to understand what actually brings people into the world of Web3 and digital assets and crypto space. So why don't you tell our listeners about your journey?
Sure, happy to do so, Marina. So I guess I've had a bit of an atypical journey into the space, and actually even into banking initially. My background is actually as a computer systems engineer, so I'm actually a closet geek, and I tend not to reveal that too frequently. But I really I've always enjoyed problem solving, enjoyed a bit of mathematics, and quite frankly, always been fascinated by computers. And that was why I did my first degree. But I moved into technology consulting. And then after that, I had an opportunity to do essentially an MBA and move into the world of banking. And in banking, I did a lot of interesting roles. I worked in M&A for a while. I ran some technology and operations teams. I worked in strategy functions, helped build businesses. So I've had a lot of different roles during that time, which I thoroughly enjoyed. But a role that I did immediately preceding this one was I led the global anti-financial crime program for Deutsche Bank. And that meant that I got a very detailed and deep understanding of the risk and control framework that not Deutsche Bank has, but really is regulatory expectation globally across different regulators. And also, I spent a lot of time with the regulators, understanding what their likely concerns are going to be, where controls deficiencies might be perceived, etc. And therefore, that kind of combined background, having technology, understanding strategy, but also having an appreciation and understanding of the controls framework that's a critical component of digital assets. That's what kind of led me into this space. And then I was very fortunate. My former boss, Stefan Hoops, who's currently the CEO of DWS, the asset manager, very kindly offered me this role to really come in and help build out this capability. So a combination of interest, background, and I would say good luck.
It's Sabih, echoing Marina's comments. It's great to have you on the show. And Sabih, I first met him. I think you were pretty much in the first year or so of running that program in financial crime when I first met you. So, I'm glad you admitted to being a technology geek. That's sort of my background as well. I guess over the last 5 years, I've become a bit of a regulation and reg tech and financial crime geek. So it's great now to have you on this show. And, I think later on we'll perhaps get some of your advice on how people move from one part of their career to another, because it's no mean feat to make that transition. So, anyway, just echoing Marina's comments. Thanks for appearing on the show. So one of the things, Sabih, that interests me was reading through your bio and as the background research to the podcast. Your focus areas are tokenization of assets, real world assets, I'm guessing, and my money, and also DeFi and Metaverse. And I'm interested, they're quite broad ranging subjects, but I'm actually interested in the value of banks doing, your bank doing a project in one of these areas. What do you learn out of it? What sort of outcomes do you expect and do you get from these projects that you run?
Yeah, it's a great question, Jason. So I think that, the first kind of fundamental building before even getting into projects is the belief the bank has. And, I think that the strong belief that we have is that, the tokenized economy is something real and there's something that will come, right? We're seeing the emergence of more and more assets being tokenized. We're seeing, the utility of that growing. So we have a fundamental belief that that will be a capability that will be required, that you will need to grow and have in-house. If you accept that as a starting point, then you then start to think about, okay, well, what does that mean? What are the individual elements of that will be needed to operate in that tokenized world and that tokenized economy? On the asset tokenization side, the place where the bank is starting, quite frankly, most banks are starting, is with the assets we know best, which is financial instruments. We understand financial instruments. We trade them every day, whether that's bond or equities, for example. And therefore, the opportunity to take those traditional assets and offer them in a tokenized form, using all the benefits that blockchain or DLT can provide: efficiency, atomic settlement, low cost of transaction, etc. It seems like an obvious place to start. So there's a whole host of effort around trying to understand how we can enable that for ourselves and for our clients. The second area that's very closely then linked to, you talked about money. Well, money becomes the next very obvious area to look at, because of course those assets need to be paid for. If you've only solved half of the problem by tokenizing the asset, but actually the cash that you still need to pay for it needs to go through the old rails, is still fiat, then whilst that might have improved things a little bit, it hasn't fundamentally changed things. And therefore, the tokenization of money, or cash on ledger, as it might be called. That's an area that we're spending a lot of time and energy on. It's not only something that we're internally looking at, obviously, from a commercial bank money perspective, but as you're well aware, many central banks around the world are looking at CBDCs, central bank digital currencies, either in retail format or wholesale format, or both in some cases. And so there's an inevitability that eventually there will be forms of money that will be on-chain, on ledger. From a central bank perspective, it only makes sense that commercial banks also have some similar capability to be able to provide their clients and customers the ability to transact in that world. So that's the money piece, and we're building out capability there. On Metaverse and DeFi, those topics a little bit further out from the perspective of, I would say they're not quite ready for prime time. They're not areas that we think will, over the next 6 months or 12 months, all of a sudden take over and, blow out financial services the way it works today. However, they both have fundamentally very interesting dynamics. We can already see, depending on what your definition of a metaverse is, of course, but we already see that there are certain types of metaverses that have emerged. Either there's a Web 2 based, you might argue that Roblox, for example, is a form of metaverse, even if it uses Web 2 like technology, or areas like Decentraland or Sandbox that use more Web 3 like technologies to deliver their metaverse experiences. But we're already seeing some of our clients move into those spaces to try and explore and understand them. As a provider of services to those clients, it's only right that we also understand what those technologies are, what they offer, and how they might affect our clients' businesses. And so whilst those topics are more experimental, Jason, which I think was really going to your question, as I said, it's kind of incumbent on the bank to understand them. That's the first thing. But it's about building our own capability and also control capability as we begin to interact with them. And just to give you just one example, in order to establish a presence on a Sandbox or a Decentraland, you typically need to have crypto. You need to be able to convert that crypto into some form of native currency to be able to then go and purchase land. That process within the bank is not a trivial one, because banks are not used to, of course, purchasing crypto or exchanging it. And one needs to make sure that the right controls and the right frameworks in place to be able to handle a transaction that you and I as a retail user could probably do in a matter of seconds and not have to worry about. So it's really about education. It's about building capability on those other two topics.
It's really, really massively interesting answer, Sabih. I mean, I can't imagine the diversity of the topics that are coming across your desk, right, every day, every week. And some are, almost like seemingly such a long way out. The metaverse example is a good one, I think. And the crypto industry, the Web3 industry is moving at such a pace, and, and it hits, traditional sort of risk and control frameworks. So I guess you're having to manage those two dynamics, right? The fast moving crypto world and the risk and control frameworks that are necessary to run a large multifaceted organization like Deutsche. So yeah, I very envious and not envious at the same time of your role.
The only thing I would say, Jason, the way we try and frame it, I think internally as well, is we try and create somewhat of a bifurcation between the crypto world, the pure crypto world, which is really purely about cryptocurrencies, where, to be honest, I think there is, there's obviously a tremendous amount of value there. If you look at the trading volumes and statistics, even today in a somewhat more depressed environment, you can still see that that entire ecosystem has been still powering ahead. And we make a distinction between that and the broader digital asset space, which for us is more around traditional finance, using blockchain DLT to take, as I said, assets like assets that we deal with in a traditional context into that blockchain DLT environment. So we try and create that bifurcation. And I think you're right, they're moving at different speeds, actually. The crypto world moves very, very fast. That digital asset world is more nascent and is developing, and it will take time to come, right, for all the reasons that you just outlined.
Yeah, I think it's all about identifying these core building blocks that actually power up, all future developments that might be happening, regardless of, which track starts moving faster. And yeah, you're right that in crypto world, things might be moving super fast, but, they may abruptly stop like we see, on the NFT side right now, it's like there's not much development happening there. And of course, I can understand how that can be frustrating if you already put a lot of resources into that. So yeah, speaking about the cornerstones and like building blocks for whatever future strategy is, I remember that back in June, it was quite widely reported in the media that Deutsche Bank had applied for a digital custody license within the BaFin German regulator. Can you share more details on this application and how this cornerstone, as I understand, fits into your digital asset strategy?
Happy to do that, Marina. So, firstly, I'd say the application is still under consideration. So, of course, I can't comment on as and when and if that will get approved. Of course, that is down to the regulator, and we will have proactively engaged with them as and when required. But in terms of custody itself, we really believe that's a cornerstone, fundamental capability required to build out other elements of a digital asset capability. And the reason really is if you think about what custody is all about, it's about the safekeeping of private keys. It requires you internally to build an infrastructure, for example, can support wallets, right? That's not something a bank naturally has. So you need to figure out how you're going to manage these wallets, create these wallets, how they will be governed, ruled. You need to think about how you're going to secure these. Are you going to go with a pure hardware solution, a software solution, a hybrid solution? What level of security do you want to employ? You then need to think about how you're going to monitor transactions that are related to that, because of course you can't use your traditional systems, your traditional payment gateway systems that look at payment flows to monitor blockchain DLT payments. You need a completely different set of tools and processes in order to do that. So what custody really does, it helps build the basis for you to be able to create offerings on top. And so custody is really, really fundamental for us. Of course, by itself, it's a business case in of itself. It's about providing access and custody for our clients to a selected set of assets in certain specific jurisdictions. But as I said, it's beyond that. It goes beyond that because it really provides the infrastructure upon which we're going to be able to build all the other things that I talked about earlier.
Yeah, I'm really interested. Maybe it's a conversation not on the show, Sabih, but really interesting as that project progresses. And actually, as a bit of a tech geek, some of the technology choices that you make and institutions make in building the infrastructure and the, if you like, the rails and the controls. I think the institutional might of companies like Deutsche Bank coming into the custody type sort of environment is the next nudge up, the next maturity of the technology needed, I suspect. So yeah, maybe that's not one for you to comment on the show, but yeah, we'll be watching that one with eager anticipation. Actually, again, in researching the show, I came across the fact that Deutsche Bank have participated in Project DAMA. It's probably not pronounced that way, so you can correct me, but a digital asset management access project in collaboration with the Monetary Authority of Singapore. And there was a proof of concept granted on the 5th of August. And, I'm not that familiar, but perhaps for our listeners more so, can you tell us a bit more about that project? And, what does the bank learn and gain from, you talked about education. What else do they gain from participating in this type of initiative?
Yes, Jason. So the pronunciation was absolutely fine. It was called Project DAMA, as you rightly said. For us, it was a great opportunity to try and, as you said, learn. I think one of the things in this space is we are all learning. It's not nobody has all the answers. It's really very much about experimentation. It's learning what works, trying to uncover what might be the barriers, and then figuring out how we might be able to get through them. I think that really enticed us in this project. Firstly, the fact that there was a regulatory angle to it. The fact that the MAS was standing behind us obviously goes a long, long way. And, we worked closely with the MAS on many different initiatives over the years. So this was great from that perspective. What this project really was about, it was really trying to figure out what is the viability of putting together some sort of platform or solution that will allow asset managers to enter into the space of digital asset-based tokenized funds. So there seems to be interest in the space, but the barriers to entry are very high. It's very difficult to figure out how do you actually do it, what is the technology need I have, which intermediaries will I have to work with in order to create structure, what about the risk and reporting, how's that going to look like, who's going to do my KYC? So there's tons of different questions. So while there's interest from asset managers in the space, there's lots of questions that are left unanswered. And so what this project was really about was figuring out, can we create a kind of one-stop shop, as it's called, where those asset managers can essentially come create those funds, but then also have them managed through that platform, have payments taken through that platform, have KYC performed through that platform, etc. So it was really supposed to be an all-encompassing solution, and of course, done in a POC setup. So it wasn't something that was going to be launched straight away. And I think we learned a huge amount from that project, because by the end of it, that's exactly what we'd done. We developed a POC, working POC that had exactly that functionality and capability. And we tried to use that project to also unpick some of the likely challenges that we can see the industry will face. One of the challenges we know that will come up, that comes up around DeFi in particular, is around identity. Generally speaking, what is not acceptable to the regulators is that payment flows or money goes between parties to which there is complete opacity, right? That just doesn't fly, and it's certainly not something that a regulated bank like ourselves would want to ascribe to. So clearly, at some point, in order to facilitate activity in DeFi protocols, there still needs to be the concept of having some digital identity, and for someone to be able to verify your digital identity. And so one of the concepts that we proved out during this project was, and Marina, you mentioned NFT, and this is a great example of an NFT that perhaps doesn't have monetary value, but is really a good example of NFTs being used, was we created a Soulbound Token, which showed we linked it to a specific individual's ID. We were then the verifier of that ID, and then that individual entity was able to perform a whole series of functions on the platform. So I think there were a whole host of learnings, Jason, that we got out of it. The idea was also to try and uncover whether there are any regulatory barriers that might exist today that might mean the launch of something like this, may not be feasible immediately because there is something that doesn't support it in regulation. So I think, there were things that came out from a technology perspective. We got regulatory outcomes. We managed to build some novel features like a Soulbound Token. So we've got a huge amount of learning, and we're planning to take that forward and think about how we can maximize this and use this in potentially some sort of commercial offering in the future.
Great answer, Sabih. The question I have back is, some of the technology innovation and work you did in that project, was that all done internally with Deutsche Bank technology people? Were there technology partners within that collaboration? Can you talk a little bit more about that?
Yeah, I can. So we collaborated actually with Memento blockchain, and they certainly were very deeply involved on the technical aspects. Obviously, with our experience of fund management, fund administration, that's one of the key activities that Deutsche Bank performs. We provided, of course, a lot of the functional requirements and understanding of the process, and of course, how blockchain and DLT might be leveraged. So it was very much a collaboration between ourselves and Memento blockchain in order to get this POC completed.
Yeah, right. Yeah, I mean, there must be a huge number of sort of learnings, and it's a great opportunity to work with technology providers, regulators, and large regulated institutions. So congratulations on that project, and sounds fascinating to see what the next steps may be there.
Yeah, I think there's plenty of demand right now on the market for such a product moving forward. So I'm pretty sure, from the commercial perspective, that definitely is paved for success, and especially because I think the bank, which invests a lot into the development like that, also on the technological part, it's very well positioned for combining all these pieces together and building these solution that would particularly facilitate, TradFi organizations and companies to adopt digital assets. Yeah. So yeah, would be absolutely happy to hear more about that, and would be keeping my eye on that development in the future. I'm interested to see, what will come of that. So yeah, and maybe my final question, Sabih, you have a really interesting career in TradFi, and you are now crossing that knowledge into this broad Web3 and DeFi and blockchain industry. But if you had just one piece of advice to a person who wants to make a similar career move, what would be that advice?
It's to be bold and learn. I think really the advice here is, there is no. Firstly, there's a plethora of information out there, right? So there's no shortage of information. In fact, I often think that there's too much information, which probably makes it much more complicated to know where to start. So it's not that, but because it's a new industry, it's a new emerging sector, you really need to take the time to learn and understand what's going on. Try and get into the flow of the news, as well as learning the basics of blockchain, DLT. But I think the other piece is also comparing and contrasting with how things work today is very, very important, especially in the financial services industry. So, I think that would probably be the key thing. The other thing I would say, which is, not really, it's not so much advice, but it's really to go into the space with your eyes open. I mean, there's many cliches that get used, that it's a roller coaster, that things are up and down. And it is very much like that. It's like that because it's an emerging technology, the same way when the internet was still nascent, there were plenty of naysayers, and some things took off, some things didn't take off. You need to have a little bit of a approach to risk, which means you're willing to understand it will have its ups and downs. But I think for those of us that have spent the time to understand technology, understand the usefulness, the applications, I think that galvanizes your belief that there really, really is something here, that it's really only a matter of time about when this takes off to a degree where it really fundamentally affects today's TradFi markets. Because the reality is, whilst there are successes in blockchain, DLT, Web3 space, it's very much minuscule compared to the world of TradFi as an absolutely huge industry. So it will take time for TradFi to be truly disrupted in a large quantifiable sense. But as I said, if you've spent the time, energy, and effort to learn, you'll understand that it is an inevitability, and you can place yourself right at the front of that technological revolution. I think it's a really, really exciting moment to be able to join and learn from this space and contribute, ideally.
Sabih, I'm sort of interested, slightly a follow-up question. When did you start your learning journey in this space? Did you have a keen interest prior to your role, or was it, rabbit in headlights moment, first day in the new role, oh my gosh, I need to learn quickly?
Probably a little bit of both, if I'm honest, Jason. I've had an interest in it. So I'm not one of the people who can claim to have been the first that read Satoshi Nakamoto the moment the paper came out. That wasn't me. But probably over the last 3-4 years, 5 years maybe, I'd seen a growing interest in this space, and I had started to read up about it. So I was somewhat aware, informed. But it's really only in the last couple of years that I really immersed myself in it. So for those that think it's too late, I've missed the boat, I would absolutely say that's not the case. You could start today, and you certainly will not have missed the boat, because we're still very early in the journey. But I read about it, I had an interest in it, but I didn't really go deep, Jason, until as I said, last couple of years. And over the last couple of years, I've had plenty of caught in the headlights moments. Right, it's happened that like any new technological space, there's lots of buzzwords, there's lots of things that seem very confusing and bewildering. But actually, also like a lot of technological things that I've had the good fortune of working on over my career, the reality is, if you take the time out to break them down and understand it, you realize most of those things are not that complicated. They're just being explained in a way, or with a lexicon that you don't quite grasp. But actually, if you take the time to understand it, it's entirely decipherable.
Yeah, a great answer. And like you, I can't take claim for being like a crypto OG or anything, and haven't been around in this industry. And Marina has a much longer sort of backstory. But I'd echo your comments on it's never too late to get involved, to pick up that basics book, to take that training course, to get involved, and once you're involved, you know, you get sucked in. So yeah, thank you very much. Okay, so I mean, I think we're there at the end of the show. A huge thank you, Sabih, for joining us on this month's show. We hope you enjoyed it. We hope it will be the first of many appearances on our show. Maybe you can come and tell us in a year's time how all these amazing projects you've got ongoing are progressing. Thanks everybody for listening. Next month's show is going to be an absolute gangbuster. We've got the Secretary General of IOSCO. I made a mistake on the last show. He's actually on the next show. But we had an amazing guest this week in Sabih. So thanks very much. And we hope you enjoyed the show. Goodbye.